Welcome, everyone, and thank you for attending today's T5 webinar, a Texas PACE primer for commercial lenders. Today, we'll discuss the Texas PACE program and opportunities for local and regional lenders. I'm Marina Bedoyan-Criticos, Senior Program Advisor for Texas PACE Authority. A few housekeeping items as we get started today. This session is being recorded and will be made available along with a PDF of the presentation. Also, please ensure that your line is muted and your camera is off. If you'd like to ask a question, you may type it into the chat box. So let's get started. Okay, here is our agenda for today. We'll start with an overview of the Texas PACE program. Then we'll run through the state of the Texas PACE market, and we'll wrap it up with a walkthrough of some of the project documentation process. So let's get started with an overview. Texas PACE Authority is the private nonprofit program administrator for PACE programs across Texas. TPA currently administers uniform best practice PACE programs for 47 local governments as a public service and at no cost to taxpayers. TPA is committed to expanding this vibrant economic development program to every region in Texas, working with all parties to bring energy and water improvements that are both economically sound and environmentally friendly. As mentioned, the program is growing across the state. It is a local adoption model, which means that while the state enabled the program, cities and counties must also adopt it. As you can see, program adoption covers the major population areas in the state, and around 60% of the population currently live in areas where PACE is live. So what is Texas PACE? Texas PACE stands for Property Assessed Clean Energy. Basically, it's a way to finance energy efficiency, water conservation, and distributed generation installations for existing commercial, industrial, and multifamily properties. Please note that government property, greenfield construction, and single-family residential are not eligible for PACE in Texas. So PACE can fund up to 100% of the cost of building improvements like lighting, HVAC, insulation, roofs, solar, irrigation, pool pumps, and so much more. Financing is provided by private capital providers at competitive rates with flexible long-term repayment terms. The program is structured so that the savings outweigh the payments, improving an owner's net operating income. And the repayment is structured over the useful life of the improvements and is facilitated through a voluntary property assessment. As mentioned, the program is state authorized, enabled by local government, and administered by a nonprofit. It is voluntary and open market, which means that owners can choose the lender, contractor, etc. of their choice. So PACE is really an economic development tool that helps communities and property owners create local jobs, improve resource conservation, and save money. And here's an example of that in practice. This is a 1926 historic 10-story office tower that had been abandoned for 25 years. It was revitalized and repurposed into a boutique hotel in the heart of downtown Amarillo using PACE. Over $7 million of PACE financing, coupled with $9 million in historic tax credits, kept a host of energy and water efficiency projects from being value engineered out of the project. PACE is a low-cost alternative to more expensive options like equity or mezzanine debt. So in addition to rehabbing the building in a sustainable, financially sustainable, as well as environmentally sustainable way, this new hotel has also created more than 100 jobs in the greater Amarillo area. So PACE really helps property owners answer the question of how are we going to pay for it? The program is transforming how developers, owners, and contractors look at projects, proving that there is a clear path forward for energy efficiency, distributed generation, water use reduction, and resiliency projects in existing buildings. PACE is a market-based finance tool that helps owners improve property by making an investment that lowers utility costs and operating expenses. By doing so, it increases net operating income and it frees up capital for the repayment and other projects, and it also helps to increase building value. The PACE statute and the program design are meant to benefit all local stakeholders. As mentioned, it is an open market program with a level playing field. The property owner gets to choose whomever they would like to participate in the program, including lender. So for the lending community, this provides a new product offering for local lenders. As mentioned, all of the stakeholders benefit, including mortgage holders. On this page, we have an example of lender consent, which is a requirement of the program. Part of the Texas PACE process is sign off by the lender that the PACE assessment can take senior lien status. Now note that Texas PACE is non-escalating and non-recourse. So the only amount that would ever go senior to the mortgage is the outstanding annual payments, which in the grand scheme of asset values, typically with these projects, it's a rounding error. Now, as a mortgage holder, do you have to consent? Well, no, but it does make sense to do so, as the asset will be improved and more valuable, and as the assessment travels with the land, it will automatically transfer to the next owner. PACE can increase the debt coverage ratio, as the projects directly reduce the building's operating cost and can result in positive cash flow and a corresponding increase in debt coverage ratio. You can also consent to yourself if you hold both the mortgage and the PACE loan. And one note, if everyone could please mute their audio and turn off their video screens. Thank you. So here is a list of consenting financial institutions. As you can see from the institutions that are listed on here, it's both large as well as small organizations that have decided that lender consent is a best practice. Now note that PACE is not a replacement for senior debt in these projects. It really is specialty financing to complete the capital stack, to help property owners and developers do the project right and to improve operating expenses. So drilling down a little more close to home, here is a list of banks and lenders that have consented to projects in Texas. Again, you'll see that there's national as well as regional players in the mix. Now, a note to the capital providers, you do have a right to say no and not consent, but don't worry about being jumped in the capital stack. This program really has been designed to embrace the banks. When the program was enabled by the state legislature in 2013, the banking institution was part of the conversation and agreed to the PACE process as a way to improve water as well as energy conservation efforts, both at the local as well as statewide levels. So here's a list of capital providers that are currently working in the Texas PACE space. Highlighted in yellow, you'll see the regional banks that are part of the program. We've been told that they like the free market aspect and that it enables them to provide a product to meet the needs of good mortgage clients. Now, the PACE program is structured to reduce risks and provide value to both the owner and the lender. The energy and water improvements improve the property values, and these improvements decrease utility bills, which can help lessen the risk of default. As mentioned, the program is non-accelerating and does not impair mortgages. And there is a high level of consumer and lender protection built into the program through underwriting and technical requirements, which we'll discuss in detail shortly. And this program is structured for the projects to be cash flow positive, and it limits the participating projects to those that meet a positive savings to investment ratio requirement. As mentioned, PACE was established as an economic development tool in Texas and can help you address specific client finance needs. Now, there is a market need for there is a need in the market for financing smaller sized projects, especially those below $500,000. And this is where local banks could really step in to help fill a financing gap. Now, the property, not the property owner, is the customer. And as we mentioned, the projects are required to have a savings to investment ratio of 1 or more, basically a positive savings to investment ratio over the lifetime of the assessment. So you'll be loaning against the savings of the project. And we understand that there may be hesitancy regarding interest rate exposure with a longer PACE term, and we're looking for ways to help you. The goal is to create a secondary market so that you don't have to hold long term. Until that happens, you have the freedom in the underlying loan agreements. You, the lending institutions, control that document and the repayment terms. For example, while many of the larger PACE-specific financing institutions set up these with longer terms and annual payments, we do have projects that have been financed with local banks that are doing shorter timeframes with monthly or quarterly repayment schedules. And PACE can also help meet regulatory ratios. A lot of you financial folks on this phone know more about this than I do, but PACE can also be booked as an equipment loan instead of a real estate loan. And while PACE is relatively new to the Texas banking market, we're seeing in other markets, Colorado, for example, over 50% of the PACE projects are funded by banks. Now, we talked about eligible improvements. And really, those are the projects that qualify for PACE are those that reduce energy or water usage on site or generate on-site energy behind the customer meter and are permanently affixed to the property. So this includes your HVAC, your lighting, roofing, insulation, water pumps, irrigation, solar panels, and more. So basically, if we can prove up savings behind the customer meter, then likely it's eligible. There's not a prescriptive list that needs to be followed because the technologies change so quickly that it would probably be outdated the day that it's published. If you're working on a project and you have a question about whether or not a specific technology is eligible, please contact Texas PACE Authority. Now note, we said that these items do need to be permanently affixed to the property. So if it plugs in like a microwave or a refrigerator, it's likely not eligible. So a lot of times, a developer owner is considering a efficiency project to a property. A contractor will come forward and say, hey, with this project, we're going to have a strong return on investment with savings over the system life. We'll be using a super efficient technology. This will be backed with warranties and proven expertise. And by installing these technologies, owners would be able to then hedge against rising energy prices and then, help to improve the building by providing increased comfort to their tenants. And the contractors are pitching all of this, as positives of doing the efficiency project. However, often what the CFO or owner hears is, okay, we've got this project in front of us now. Where am I going to get the funding for this? What happens if I sell the building in the next 3, 5, 7 years? Our hurdle for these types of projects is a payback of 3 years or less. And this is a good technology, but my tenant pays the energy bills, I don't. So what is the value of me as a property owner putting the money in to do these upgrades when my tenant's the one who's going to reap the rewards? And then finally, are the savings even real? We have all heard stories of projects and technologies that have turned out to be too good to be true. And so what's the mechanism in there to ensure that the property owner is going to realize the savings that are projected? So PACE helps to develop a solution that will provide 100% upfront financing for all hard and soft costs of the project. It does allow for a long-term repayment term up to the average life of the equipment. And as we mentioned, this is transferable, so the PACE obligation will transfer automatically upon sale or divestment of an asset. Because of the structure, it doesn't tie up borrowing capacity. And as we'll talk about in a little bit more detail, it requires that the savings be validated by a third-party review. So it's not just the contractor saying that 1 + 1 is going to equal 2, but a third-party engineer will come in and validate that 1 + 1 on this project will indeed equal 2. So what we're really looking at here is when you have typical projects of short-term financing plus a long return on investment, for most owners that equals cash flow pain. And so with PACE, you have a longer simple payback, which isn't an option. Basically, the program is structured, as you can see from the chart on the right, that the savings will repay the project, and then the property owner can more easily repay the lender. Also, the program provides owners with solutions to common property retrofit investment barriers. As we talked about earlier, sometimes property owners and landlords don't necessarily want to put in energy efficiency or water conservation improvements if the tenant's the one paying the utility bills. However, depending on the structure of the lease, PACE can be passed through to the tenants. So then as a pass-through, the owner gets an improved building, the tenants have a more comfortable space with lower utility costs, and the owner is then able to pass through those costs to the tenant. So here we have 3 scenarios of a 1.1 example, a $1.1 million example project. As you can see, the way this is set out on the left, we've got typical self-funded where you're paying cash out of pocket for the project. In the middle, we've got a conventional loan. And then on the right, we have PACE. As you can see with the top line, the out-of-pocket investment with PACE, 100% upfront financing, so there is no out-of-pocket investment there. Your average annual savings, because the project is the same, will be the same across the board. What I would like to draw your line to is your cash flow impact year one. PACE is the only option with an immediate positive cash flow. And so with this, you're able to get that return on investment that is cash flow positive and allows the property owner to then take the extra money and invest it where it makes the most sense in the building. Now here's another example of a project. As you can see with the first green circle, PACE swapped in for more expensive mezzanine financing. The owner was able to borrow an additional $2 million at half the interest rate, which dropped the weighted average cost of capital by nearly 2 points. And we know in all projects, the interest is expensive, but especially when you're talking about projects of this magnitude, being able to borrow an additional $2 million at half the interest rate really helps a project work out. And for this specific project, then they were able to expand some of the energy efficiency and water conservation measures that had been on the block for being value engineered out. So how does PACE work? As we've talked about, the state-enabled legislation, which allows the city or the county to create a PACE region. Property owners then sign up for the financing and install their energy and water improvements. The financing is provided to the property owner by the private capital provider to pay for the projects. Then the property owners repay the loan through the property assessment, but in Texas, it actually goes directly to the capital provider. And as we've discussed, PACE is an expansion of traditional land secured financing. It stays with the land, doesn't transfer with the owner, and there is no acceleration. Unlike traditional land secured financing, PACE is 100% voluntary. Property owner does not participate until they opt into the program and choose to have work done on their property. And the program participants are paying only for the cost of their project, including the interest and nominal fees to administer the program. So in a little bit more detail, again, this is just some definition to what you saw before in those 4 boxes. What I did want to draw your attention to is the last box here in green, which is unlike other markets, the property owner sends the installment payments directly to the lender. So there is no go-between. This is an opportunity for the property owner and the lender to work together on that. So basically, with all of this, PACE is an assessment tool to reduce lender risk so that lenders can safely lend for more than 5 years, which allows the owner to then invest more in the building. The collateral gets a big infusion of cash. And the whole assessment is a senior lien. It's non-escalating, so the only part that can be collected is the portion in arrears. And as we showed earlier, it's structured to be cash flow positive. And as you know, customers who are cash flow positive are more likely to make their payments. And as we said, the collateral is on the property, not the measure. So in case of default, you can't really take back an AC system, but it hasn't happened in Texas, but you can take back a building. Now, with all of this, underlying the program is a super high level of consumer protection with uniform underwriting standards that lay on top of the lender's underwriting and uniform technical standards. So the PACE technical standards are based on nationally accepted industry standards. The working group that developed these standards was chaired by the head of the State Energy Conservation Office, and these standards are implemented uniformly across the state. To protect customers, the baseline study and the projected savings need to be reviewed by an independent third-party reviewer, as I said, to ensure that 1 + 1 is actually equaling 2. This independent third-party reviewer, who's a licensed engineer, also completes a report that we'll talk about in detail later on, that the project was properly installed and is functioning as intended. So basically, there's a 2-part check process on the projected savings as well as the installation. There are also underwriting standards that Texas PACE Authority has through the PACE in a Box program that are in addition to the underwriting agreements that the lender has. Three key items here that I wanted to focus in on. First is the loan to value, or the PACE assessment to county appraisal district property. That value cannot exceed 20%. So if a property wants to use a private appraisal value, a request for variance must be submitted, and those will be evaluated on a case-by-case basis. There's also the requirement that the project savings are equal to or greater than the investment, as the goal is for this project to be cash flow positive. And then, as mentioned, if there's a mortgage on the property, there is a requirement that the mortgage holder grant written consent to the PACE lien. All right, let's talk a little bit about the state of the market in Texas. PACE is a program that's available coast to coast, with programs now active and launched in 22 states plus the District of Columbia. All of these programs differ a little bit in how they're administered, and so the Texas program has a little bit of its own flavor, which is why we like to do these webinars, especially for folks who work in other markets across the country, to have an understanding of how Texas PACE works and some of the different processes that have been baked into the program. Here's an overview of the national PACE market. As you can see, the growth trajectory on the right over the course of the past 10 years has been quite strong, with over 1.5 billion invested and over 2,400 projects completed to date. So let's do a brief history of the Texas PACE program. Really, a Texas approach was taken when creating this voluntary program. There was a long look at the market mechanisms that can help improve resource efficiency and incentivize investment as cost effectively as possible. So there was really a lot of interest by the legislature in helping property owners, developers, and contractors get access to resources that would improve the energy and water efficiency of the building, as well as help increase the adoption of distributed generation technologies. Really, it's an economic development tool that can help drive investment in the clean energy market. So the legislation was passed with Senate Bill 385 to create the Texas PACE statute in Chapter 399 of the Local Government Code. And this allows local governments to work with private sector capital providers to finance qualified efficiency improvements on eligible properties. Now, the push to get this adopted really was a bipartisan initiative that was supported by the business and environmental communities, along with local governments. So once a region is completed, the private sector lenders, property owners, and contractors come in to develop their project deals, and private financing is used to fund the projects. To date, over nearly $110 million in PACE investment is what's been realized across the state of Texas. And even in these interesting times that we're currently living in, we are still seeing that investment rate continue strong. So a nonprofit, Keeping PACE in Texas, promoted and helped with the passage of the PACE Act. It also brought together over 130 diverse stakeholders from business, academia, nonprofits, and local government to standardize the PACE process in Texas. The goal is to have an easily replicable program that is easy to understand so that owners and lenders don't have to learn a new process each time they go to a different region in Texas to do the project. Basically, the PACE in a Box process brought together all of the pieces from reports to documents to technical standards to ensure a standardization and an easily understandable way to use PACE across the state. The recommended form of administration is either the local government or a nonprofit in a transparent manner. And these recommendations are updated on a periodic basis as new learning occurs and best practices are developed. So Texas PACE Authority, as the administrator, basically sits in between the local government, property owners, service providers, and capital providers. TPA ensures that the legislative intent, technical standards, and underwriting requirements are adhered to. Basically, we're the process gatekeepers. We ensure that the projects meet all of the financial, technical, and legal requirements. So drilling down to capital providers and the offerings there, as mentioned, the Texas PACE program is a free market program. So if lenders want to participate, they just need to submit a submission of interest, meet the qualifications to be eligible to lend in this market. And TPA provides a host of resources for capital providers on the website, including an in-depth FAQ list, as well as additional information, details, tools, and resources. So TPA is really here to help you navigate the process and answer any questions you might have. So by the numbers, as we said, to date, over $109 million has been invested in the Texas PACE market. This is 32 projects, and over 60% of the Texas population lives in regions that have enabled the Texas PACE program. And as you can see, this growth trajectory mirrors the national pattern that you saw on the earlier slide. Wanted to note that the blue bar is skewed a little bit by a very large project that took place at that time. It was not only the largest project in Texas, but the largest PACE project in the country. So yes, we do everything bigger and better in Texas. And as far as projects go, there is a lot of diversity in the types of properties that have used PACE. Really, it runs the gamut from urban to rural, hospitality, office, and more, and a variety of measures that span energy efficiency, water conservation, distributed generation, resilience, and demand reduction have been leveraged. And the project sizes really are, on the smaller size. As we said, there's a need for projects under $500,000. The smallest project done to date is $68,000, with the largest project in Texas to date being $24 million. All of the projects have received 100% financing, and those that required lender consent received it. So let's look at a few projects. This is the Elgin General Store in Bastrop County. This is a great general store out there, and the owner was concerned about reliability of electricity to the site, knowing that they needed to stay up and running no matter what the weather. So there was an installment of solar PV on the roof. And this was financed by a local bank for a good customer. What's really interesting about this project, and one thing that Texas PACE Authority encourages with all projects, is that it's not just the assessment, but with this project, USDA REAP grant as well as Encore incentives were stacked on to $62,000 that helped reduce the amount that was needed to be funded through the assessment of this project. And this particular project was financed by a local bank for one of their good customers. And it was done for a shorter PACE term than we see with some of the other PACE funders. This was actually done for, I believe, 10-year repayment and, 10-year repayment, and then the repayment schedule, rather than being annual or semi-annual, is actually on a monthly basis. Again, the repayment terms, that's determined between the lender and the property owner, and there's quite a bit of flexibility. So looking at a little bit of a bigger project here, we have the Plaza Hotel, a historic building in downtown El Paso. Again, this was an opportunity to take a building that had previously been empty and breathe new life into it as part of an economic development situation for the region. So not only was the building rehabbed, which has helped to be a catalyst for that part of El Paso, but also has created over 100 jobs. And again, looking at how this PACE can fit into the overall capital stack, we looked at $9.2 million in historic tax credits that were layered on top of, the PACE assessment of $9.2 million. And then the Continental Gin building in the city of Dallas is a nationally funded project. So like all of the projects we're discussing today, this one also received lender consent and is a great example of basically a complete rehabilitation and repositioning as well as revitalization of an area of Dallas, in a mixed-use project that will help to draw a diverse crowd of folks and really bring in some interesting combination of projects to be demonstrations, such as the solar that's being put on this site. And then we've got the Levy Warehouse, which is a smaller excuse me, project in Navarro County. This is a national organization based out of St. Louis that makes cheerleading uniforms. They were looking for a building in Texas to move some of their manufacturing, came across the property in Navarro and wanted to leverage PACE to be able to rehabilitate the property, as well as bring about 70 new jobs to the region. So as you can see from the examples that we've just looked at, PACE really is an opportunity for economic development and community reinvestment. So let's talk about what's required in a project. We've seen some examples of some really good projects that have been done, but let's talk through process a little bit. So typically the process for projects kicks off with Texas PACE Authority receiving a call or an email from an owner, or more often the lender. If they're unsure about the eligibility of a property, we ask that an eligibility form be completed so that we can determine if the property is eligible for PACE. The form asks for some background on the project, the location, as well as the history of the site. And the goal of this is to determine whether or not the property has been previously developed, as PACE in Texas is not eligible for greenfield or previously undeveloped properties. So once the eligibility is determined, then an application is completed. So as you can see, the application process here is pretty straightforward. Asks for some basic information about the property, the lender, contact information, the measures, as well as approximate value. So this starts the clock on a project. So basically, once you file the application, then we'll start that clock going, because work that is done prior to the application filing typically will not be eligible for PACE financing. So if you're thinking about financing measures with PACE, but you're not sure about a project start date, please contact Texas PACE Authority as soon as possible, so that we can, see how we can work with you to ensure that the project in its entirety can be eligible. So here is our required documents checklist. It contains, a list of documents that some of which are part of your typical underwriting process. Others are specific to the Texas PACE process, and all of these documents need to be received in order for Texas PACE Authority to perform its legal and technical review. Basically, with the process, once we receive an application and the application is approved, we then create a shared online folder that contains pre-filled out templates of a lot of these documents. So those can just be downloaded, filled out, and uploaded again. And then this is kind of the checklist that we use to go back and forth to make sure that all of the documents are been completed and received, so that we can then perform our technical and legal review. Now, I know the one piece that the lenders are asking about is the underlying financing documents. So these are your documents and will reflect your underwriting requirements. Whether or not you choose to have an unlimited guarantee or a promissory note, these financing agreements and the language in terms within them are yours. They will be listed on the PACE owner and lender contracts as the underlying finance documents. And as part of the project closing process, Texas PACE Authority does need the executed copies. So as I said, these underlying financing documents are yours. You control these documents, you control the repayment terms, so there's flexibility there. If you want, how long you want to structure the repayment, and if you want it to be, monthly, quarterly, semi-annually, annually. So as we talked about earlier in the process slide, there's 3 documents that are the pillars for really the Texas PACE program that kind of bind the whole project together. The first is the owner contract. And this is a contract that the owner signs with the local government PACE program. And this is the document that places the senior lien on the property. Texas PACE Authority will, as part of that download document process, once an application is received, will provide the owner and or the capital provider with a pre-filled out form a pre-filled out version of all of the contracts as part of the document set that are created for each project. So in addition to the owner contract, we also have the lender contract. And this is one that the capital provider signs with the local government in exchange for the assessment payments. And as we've talked about, this is where the owner then makes the payments directly to the lender. So embedded in the lender contract is Exhibit A, which is the owner contract, also an exhibit that contains the financing documents and the payment schedule, and also an exhibit that contains the construction terms. And then finally, the notice of assessment. This is the document that is filed at the county and actually places the lien on the property. As we said, this is executed by the local government or the local government representative and contains within it 3 exhibits: the property description, the qualified improvements, and the construction term. Now, the property description is the legal property description. The qualified improvements are the PACE finance improvements, and then the construction terms are just your typical construction terms. As you'll see on here, neither the lender nor the owner contract are part of the notice of assessment. So we touched on lender consent previously, and as we've said, it's a requirement of the program for the PACE assessment to take senior lien status. As we've mentioned, PACE is transferable, it's non-recourse, and it's non-escalating. So in the event of a foreclosure, which hasn't happened to date, the only amount that would ever go senior to the mortgage is the outstanding annual payments. We do have a template, a lender consent form, which, as indicated on this slide, is embedded into the owner contract as one of the exhibits. And there is a little bit of flexibility in this form for the lender to add additional criteria on here if they so choose. So for those who are interested in additional resources of why a lender would grant consent to PACE, we have a couple of resources listed here for you. And as always, Texas PACE Authority is happy to talk through the process with a mortgage holder, as part of the PACE program to ensure that they're comfortable and understand what is being asked of them through this lender consent process. So we touched on the assessment, appraisal, and loan to value a little earlier in the underwriting standards. And this is a form that, the PACE loan can't exceed 20% of the property assessed value. If folks would like to request a variance, there is a form and a process that does need to be completed to allow for up to 20% of a private third party appraisal amount. And we've had projects, go both with, the 20% or less of the CAD value, as well as projects that have worked with the appraised value. So this capital provider information form requests additional required information from the lender, basically including method of servicing, interest rate, authorized signatures for the owner and lender, explanation of sources and uses, lists of the contractors and the sub, etc. Everything that's on here is information that you've already gathered as part of your standard process. We're just asking for it on one form. And the owner and lender certifications are also pretty straightforward. These are documents where the owner and lender each certify that they are who they say they are, and that they are able to comply with the program requirements. So the engineering analysis report is a report that's developed by the owner's engineer. And this details the energy efficiency, water conservation, and distributed generation measures that are being specified for PACE. It also notes out the modeled savings. This is a document that is reviewed by the independent third-party review engineer and is also reviewed by Texas PACE Authority. Basically, this is a document that takes all of those measures that will be listed in the notice of assessment that will be funded through PACE and gives an explanation as to what the measures are, some details as far as the economic benefits, and talks through different characteristics of each one. And as we said, the independent third-party reviewer takes the engineering report, reviews it, and then plugs the numbers from that report into this spreadsheet. And what they do here is they take that information and then calculate the measure useful life, the costs, and the savings. And this is what we used to determine the savings to investment calculation that ensures that the savings to investment ratio of 1 or more is met. And then the ITPR certification. This is a document that the independent third-party reviewer, who is a licensed engineer, signs and stamps, stating that they have reviewed the engineering documentation and that it appears to be correct, and that as modeled, the savings should be realized. There's also another form at the completion of the project that the ITPR completes after they do a site visit, where they state that the items that were specified as part of the PACE process were installed and that they are working as intended. So you may be asking, how do I find an ITPR for a project? Contact Texas PACE Authority. We have a list of folks who have been trained in this specific process, and happy to share that with you upon request. So there are some additional required documents as part of the PACE process. Some of which, are probably already part of your standard underwriting process, and a few that may be part of the standard Texas PACE process and may be new to you. We'll run through this list real quick. The first is a tax certificate from the local tax assessor entity, and this is just a document that shows that the property taxes are current. We also require a certificate of fact from the Texas Secretary of State's office that shows that an entity is in good standing. A verification of franchise account status from the Texas Comptroller of Public Accounts. And then a property title report prepared by the title insurance company. Also, we need documentation that indicates the authorizing signatory for the owner. So a certificate of incumbency and consents and company organizing documents. And then finally, information about the sources and the uses of the PACE funds for the project. The PACE program really is a win-win, or I guess in this case, it's a win-win-win-win-win. For the property owners, they get a lot of benefit at it with decreased utility bills, increase in energy and water efficiency, and overall property value increase. For the contracting community, it's an opportunity for a source of increase in businesses. There's an opportunity to improve with local jobs and keep up with technology investments. For the state of Texas, we've got all these folks that are moving to our state as well as these hot summers. So we need to ensure that we're able to reduce peak demand and improve grid loading. Also looking at opportunities of distributed generation as a resilient power source. And by potentially, decreasing the amount of energy being used, we're going to be able to improve air quality as well as conserve water. And then for our local communities, an opportunity to increase economic development and jobs, look at improving the infrastructure and our building infrastructure, as well as creating, a more appealing building stock for investment, local investment. And for the lending community, this can be a source of new loans that has baked into it a steady and stable process. These are fully collateralized with the tax assessment lien position, and it's an opportunity to improve asset value. And here are a few resources Definitely encourage you to take a look at these and dig through what some opportunities might be for you to see where there might be some additional tools and resources that you're looking for, or always feel free to reach out to any of us at Texas Space Authority. So it looks like we have a couple of questions, so we'll run through those. If you have any questions, please type it into the chat box for discussion, and ensure that all lines are muted. So the first question is about the length of the assessment. So really that depends. The longest it can go is on the weighted useful life of the equipment. So if it's multiple measures, excuse me, what's the weighted useful life of that equipment? And then that's the maximum that the assessment can be structured. In some cases, the owner and lender have decided that maybe they don't want to go out 20 years. They want to pull it back to about 10 years, in which case, again, that's part of those underlying finance agreements between the lender and the property owner. That part, is completely up to you. In addition to the repayment schedule as to whether it's, annual, monthly, quarterly, semi-annual, that is a determination that is made by the lender and is dealt with directly with the property owner. That isn't a requirement of the Texas PACE program. Okay, let's see. Okay, what is the average interest rate? So that again depends on the lender and the underwriting criterion that you have. We definitely have seen, over the course of the program in Texas, the rates to be very competitive. But we also, it's understood that each lending institution has their own underwriting process, and neither Texas PACE Authority nor the state set minimum or maximum requirements for the interest rate for these loans. Okay, well, it looks like that's about it. So we will send out an email with a link to the presentation and contact information. So thank you everyone for joining the TPA T5 webinar series. Previously, we've covered an overview of technical standards, and we've done a deeper dive, and that information is available on the Texas PACE website. So we will follow up this session with a deeper dive going into the details of the mechanisms of the lending process. So, please be on the lookout for upcoming emails and visit the TPA website for information about upcoming webinars and events. Thank you all for attending today. Stay safe, everyone, and this session is now concluded.